Good day to one and all. This is Dr. Sivaraman of iknowindices.com. Hope you are able to hear me. Let me display the PowerPoint presentation. It is going to be tracking the forex market together, part 1, and it is a monthly twin webinar. I give it during that of the European session between 9 and 9:45 GMT, and the second part between 14 and 14:45 GMT of the same day. Today is May 27th, so let us track the market live using the live market code page. I'll give the link for the same and you can open it in a browser. I will also focus the live camera over that of the live market code page and you can see the current market level. Now currently Euro is trading around 1.4202, 1.4204. The low was 1.4125 that was formed during the start of the Japanese session. Then it went up quickly to 1.4277 and 58 pips positive net change is seen. It has come to that of the middle level around the psychological level 1.42. So after gaining all the way the level from 1.4125 to 1.4275 during the Japanese session, they started making the slide now. Then in the case of GBP, currently trading around 64.07, 64.11, 63.80 is the low, 64.59 is the high, 5 pips positive net change is seen. When Euro is showing 60 pips positive net change, GBP is showing only 5 pips positive net change. Don't take the fifth decimal, take only the up to the fourth decimal. Then in the case of the yen, it is trading around 81.02, 81.05, 80.84 is the low, 81.41 is the high, 24 pips negative net change is seen. And also in the case of Swiss franc, it has come to all-time low, 0.8582, 0.8585 are the current levels, 0.8535 is the low, 0.86862 is the high, 71 pips negative net change is seen. The majors are showing the USD weakening move. Coming to that of the crosses, you find Canadian dollar is showing positive net change of 2 pips, 0.9778, 0.9782 are the current level, 0.9754 is the low, 0.9795 is the high, 2 pips positive net change is seen. Australian dollar is showing 18 pips positive net change. It's trading around 1.0661, 1.0664. 1.0609 is the low, 1.0716 is the high. So when Canadian dollar is showing positive net change, it is USD gaining move. When Australian dollar is showing positive net change, it is USD weakening move. So they are showing the contrarian move in the commodity pairs. So after making a very quick rise from that of yesterday US session close, the players have gained the levels very quickly, induce all the people to become bullish and do the short covering and turn long and started making the slow slide, which is the intentional move. So many of the people have made the comments in the blog and other occasions in the webinars that they wanted to understand how to read the live market code page. So let me spend some more time and explain to you how exactly you can read the live market code page. And currently you find that Euro is trading around 42.05, 42.08 level, 62 pips positive net change is seen. So that means from that of Friday close, from that of yesterday's close, it has gained about 62 pips. From that of yesterday's close, it has gained about 62 pips. And in the case of GBP, from that of yesterday's close, it has gained only 9 pips now. So imagine somebody has gone short yesterday towards the close and you would have got frightened when it has gone up, but subsequently he is only seeing a 10 pip negative net change or 10 pips of loss and he is not in a hurry to close it. And so obviously you will come across that market has gained only a nominal pips of 10 pips. That means what? The players are holding high and consolidating here, inducing the traders to go in for the short covering, and afterwards they intend to make the slide. So how you will be able to judge it? When there is a rise of 100-150 pips quickly from the start, then quick moves or false moves in the market. So during the Japanese session, you would have noticed euro was quickly making the rise as if it is going to the sky, and which would have given that impression to many of the traders that euro could go to 1.43, and some was telling that it may even go to 1.44, etc. Yeah, it can go, but not today. So that we need to understand. So after going to 1.4277 around 3:30 GMT, they started making the slide. Then during the European session, they have not breached the high, even though they have been holding around and made some false move and started making the slide. In order to understand this better, what we have to do is note down the initial lows and the highs which are set. So let me show the slide of the initial lows and the highs set around 3:30 GMT during the mid-Japanese session. That is the time the players set the highs and the lows. Afterwards, they try to breach the high and go above, or breach the low and go below, and that sort of moves. We'll be able to judge from that of 3:30, from 9 GMT, nearly about 6 hours, what they have done. They have not breached the high in the case of euro. 1.4277 was formed around 3:30, and still they have not breached it. They have come to that of the middle level, 1.42. And so, you know that they gained the levels very quickly in order to slowly build sell positions. Why they want to sell the positions? Because they had taken the buys at the lower level yesterday and day for yesterday, when they have been coming closer to 1.4079, initially 1.4002, 1.4034. This is how they have been forming the low. So at that time, they have been accumulating the buy, and above all those highs, they have taken the market. And obviously, those who have been selling in this range will get caught, and if they are not covered it during that of the drop. So during that of the last week of the month and the first week of the month, they are expected to make this sort of volatile moves. So if you understand that they made a quick rise in order to simply gain the level when the traders are not actively participating in the market during the start of the Japanese session, they simply gained the level, created the fear, and normally when they show higher levels during that of the Japanese session, people will think that during the European session, they will make further rise when the volume increases. So everybody said that the resistance has been broken and the market is expected to go further high and things like that. But the players have just formed the high by 3:30 GMT. Afterwards, they are not breached, even though they have been trading around 1.4256, 1.4260 and things like that. That is mainly the circular trades in order to induce the traders to take the short covering, and then subsequently they started dropping. So they have come to that of the 1.4209, 1.4211 level currently. Then in the case of GBP, they formed the high as 1.6445 and formed a new high 1.6459. Then subsequently they made the drop. The range between the low and the high is very narrow. Here about 20 pips, here about 45 pips. To 65 pips is the spread. And finally they formed a new high 1.6459. Just a nominal gain above that of the initial high. Now very well trading below that of the initial high. So anybody who has taken a sell position near that is in the money now. So you can keep stop at entry. So what is their intention? You have to read that. So the players gained quickly the level, made a brief upward stop and above that of the high during the gap time, and then subsequently they started making the slide during that of the European session when the volume improves. So when the traders become bullish, okay, the dips are buy opportunity where they buy about when there is a drop of 20-30 pips. Sell and buy is very risky because the market has gone up, so they will try to buy. The intention is correct, but the players wanted to trap such traders. So during such small dips, if the traders buy, they simply hold and they don't show the profit. And towards close of the session, they make further drop. And those who have been buying it, thinking that the market has really gone up and the retracements are good buy opportunities, they just give it to them and then drop and hit their stops. Otherwise, drop further down and induce them to become panic and liquidate the long positions. So you know that in the first 4 days, they have been holding at that lower level and making the range bound swings, and the traders have thought that, okay, this is the range, we can do a sell near this, we can do a buy near this. That is how they have done it. And subsequently, they have made one upward gain. And what is going to be the next in the card? They are going to go below that of the low set in this particular week, initial low 1.4002, and go below and induce all the long holders to liquidate. And that is going to be the type of moves we come across during the month end. So it is now 27th. This is a weekend, but still it's not a month end. Next week we come across the 30th and 31st, or the last 2 days. During that time, they are expected to show all the lower levels, create all the panic. Probably they can highlight Greece problem or France problem or any other European country problem or UK problem. Simply they can highlight or just talk about it in a loud manner. So everybody will become bearish and start liquidating, but the players will be buying it. So they just gain the levels and slowly sell and create the panic in the market on the downside, and then try to buy it from that of the traders. So once you note down the initial lows and the highs, how far they are doing the range on a daily basis, how they made an upward move from that of this particular range, about 100 pips, and they are expected to go below this range and go below this, because it's a month and time. So they are expected to show for the lower levels. And on a Friday, when they quickly gain the levels during the Japanese session, understand they wanted to do the intentional move throughout the day. What is their intentional move? It is now sliding from that of 1.4277. They have come to 1.42 and reach briefly 1.42 and then come up, and that is how they just induce the traders. Okay, 1.41 is a support, why not you type? 1.42 is a support, why not you buy? That is how they create the field. They cannot simply just like that drop it and no trader will enter into the market. Or probably the traders will also go along with them and sell. So they have to necessarily slowly drop. That is their intentional move. And when they make such moves, the quick rise was a false move, because they quickly gain the levels without buying much of a quantum of positions, but slowly they are selling it. And slowly they are dropping it with a huge volume. All the buy positions, they are just liquidated and turning sellers. And we follow the charts and we follow all the price action and think that, okay, a small dip, we should be able to enter, aiming for about 20-30 pips profit, but they show the other way move in the market. So understand their intention, then you'll find that the fear in the mind goes off. Then in the case of GBP, as I said, they made briefly upward stop and the low is close by now, and hardly about 30 to 40 pips from that is the low. And once they breach the low, everybody will go in for a breakout sell trade. So what the traders have done, so during the trend reversal, they try to trap the breakout traders. So once they breach the normal high and go above that, they show the profit, but the breakout traders out of greed hold the position for more than one session and try to see that the market comes back to the same entry level. So when you are doing the breakout trade, you have to be very, very careful. You have to try to close it when the trend is in your favor. Then in the case of CHF, they formed 85.35 around 3:30 GMT. Afterwards, they are not breached that particular low and still holding around 85.76, 85.79. So 77 pips negative net change is seen when Euro is showing only 62 pips positive net change. CHF has shown 76 pips negative, is showing 76 pips negative net change. So that means CHF has dropped more when compared to that of Euro rise. Why? Because a lot of traders, when CHF was trading around 87, 88, 86 level, they thought that they are all showing the lows. And especially when you try to do the bottom fishing, when you think, okay, this is the bottom, we try to buy it here, and that might appear as a safe trade. They go further deeper and induce them to liquidate the long and go up. You know very well that traders will be afraid of taking further longs. It may lead to over trading. So obviously when they hold like this, show a new low and just keep it below that of 0.86, automatically those who have taken the long positions will try to liquidate, and later on they will come back in a very quick way. So it is not the level is important for them. It is the question of trying to create the fear for the traders. Only out of fear and emotion grip the traders can do wrong trades. So now you find that euro is slowly coming below that of 1.42. So they are not doing any sort of pullback. So that is the skill set of the players. So we need to understand it, and we need to identify the type of moves, what they are doing in the market. Then you will be able to take participation in the market. Now coming to that of yen, this is a currency they have been holding it around 81 to 82 for a very long time, and then they showed just below the new low and 80.90, and they just made a brief downward stop into 80.84. Yesterday you would have noticed from 82 they quickly dropped to 81 area, and immediately all thought that what happened to yen? Why has become a safe, so strong? And everybody started giving that attribute that it is a safe haven currency, similar to that of CHF. So they induce everybody to talk like that, but the players are just trying to accumulate when the traders are selling in distress, and loudly they talk that it's the safest currency, it's a safe haven currency and things like that. And when it was around 87 they have not been telling it, but at 85 they have been telling it, or 86 they have been telling it is a safe currency. Why? Because they gained the levels and distributed their positions and afterwards dropped, and they are now buying. So they tell everybody, come on, sell US dollar and buy CHF at the bottommost level. So this is how they create that impression for the traders. And you know, the technical analyst also, when they look into the chart, then they say that, okay, yeah, it is because of safe haven currency strategy, all are entering into CHF, and nobody is going to hold any other currency other than CHF, as if Switzerland is ruling the world. And so they create that sort of impression, and those who are holding small positions, they find it is really time testing. They simply liquidate all their long position. Later on, see that it goes up again. Similarly, yen also, they are doing it in a very similar way. And all along they have been doing it in Canadian dollar, but Canadian dollar, the volume is relatively low, so they have just made a gain there. And similarly, in the case of Australian dollar, from that of 1.04 to 1.0505 to 06, 06 to 07. That is how they done it, and I was giving in the Monday webinar that from that of 1.04 to 1.07 they will try to oscillate and then try to drop. And now today they went up to 1.0716, and subsequently now it is holding in the middle level 1.0659, 0662, and 16 pips positive net change. From that of yesterday's close it has gained only about 16 pips. And after forming the high during that of the Japanese session around 3:30, they have not breached the high. So they just created the hype in the market and started booking profit. And this we need to understand. And in the case of Canadian dollar, 97.62 was the low. They formed 97.54 as the new low. 97.54 as the new low by breaking the low by about 10 to 12 pips, and then subsequently 97.95 is the high. They are trading in the middle level, 97.75, 97.79. So you find that Canadian dollar was trading around 94, 95, 96. Now it has come to 97 level. It is not going below. When Swiss franc was trading around 90, 91 like that, and Canadian dollar was making a downward move. Then now Canadian dollar is making upward move or not dropping big. Swiss franc, they are making a drop. So alternatively, in the case of denominator currencies, they are trying to trap the traders. Anybody who is trying to take a buy position, they are inducing the traders to follow technicals and sell at the lowest level. And finally, they will make one-sided rise in all those currencies. Nobody will talk about safe haven currency, and simply they will say US dollar is the safe haven. So from time to time, they will call any one currency as a safe haven and all have to follow it. That is what they create the hype. And so if you go by that, then obviously you will be doing only losing trade, because after the drop, you know that there are always the news release about the big players holding currencies. Some of the big traders like Soros, they offloaded silver, and that news was flashed out like anything after silver coming to 33, and everybody thought that it will go further deeper down. But after the release, they started buying. They are already sold and then released the news, and it comes as a late news. But we think that it is a recent news released in the market, and immediately we try to liquidate. When the big players have sold silver, then where is the question of me holding a higher level long? So liquidate. Then later on, you find that silver has gone to 38 level. So create the hype and induce the traders to liquidate at the lowest level, and they happily buy against their sell. This is what happens in the market, in every market, day in and day out, and we need to understand that. So make a note of the initial lows and the highs, whether it is a commodity or the majors or the commodity pairs, or in the case of the commodities like gold, silver, oil, if you are trying to trade it, they have the specific time to set the initial lows and the highs. You make a note of it. I have taken such a long time to explain this and also the live market code page. And in the live market code page, you are watching the levels and also you are watching the net change. Let me focus the camera over that of the live market code page. So you watch the net change, how the net change is gradually getting reduced. So hardly you find 11 pips now, 10 pips, 9 pips, 22 pips only the drop. But initially it was about 112 pips. Now it is only about 74 pips. So here only 2 pips and 13 pips. So when you see all those things, you understand they are simply holding it and made a quick upward stop and holding it. We simply say it as a consolidation, wait for the drop. We do not know when exactly they are going to make the drop. So if you follow the session timings, then it will be easy for you to understand when exactly they are going to drop it. So let me focus the camera over that of the session timings. So these are all the 3 session timings, Japanese, European and US session. So around 3:30 during that of the Japanese session, they had done it. And these are all the timings followed by that of the players. It's not my own timings. These are all the timings followed by that of the players. And because of the natural positioning of the banks in various countries, they come across 30 minutes gap. During that, the banks do not make official currency conversion trades. And such times, they make use of as a gap time. And why? Because they try to place big orders there. The banks, you know that it is not like our online trading terminal where if you want to say when euro is around 1.4202, if you want to buy euro, a big quantity of 1.4250, you can only keep a limit by order, but you cannot place a market order. But in the bank, you can place a market order 1.4250. You find sudden jump happening in the market up to 1.4250. That is how they make the moves in the market. And in that, they place a huge quantity like 5,000 lots, 10,000 lots, 20,000 lots like that, and place one big higher buy order. And immediately the market jumps. Everybody thinks that, okay, market is breaching all the resistance because of the data release and things like that, then think that it might go up. But what they do is, in the bank, they have got a special facility. In case some of the exporters and the importers, if they want the conversion at as a one single transaction, at one single level, then say they place about 30,000 lots at a rate of 1.4315, and when the market is around 1.4205, and it will go up to that and look for any one single currency conversion, and it will not fill all other cells at 1.4215, 1.4235, 1.44, 4245. All orders will get exposed, but that will not take it as the buy order will not get it filled with such small lots, and it will only look for 50,000 lots of sell order at 1.4315. After that, it will search. This is referred as all or none order. So why they going for such orders? Because they want to see that the transactions happen in one single trade, and that is how the bulk trades happen. And whenever they go in for currency conversions, billions of dollars and things like that. So that facility is being misused by the other players, and during the gap time, they place such orders and try to make the stop-ins. Then afterwards you come across a session. During the session they don't make such orders, and they only make small swings. And now you find that euro is slowly coming below that of 1.42. They slowly sell and they don't support, and automatically you find towards close of 13 GMT the sudden drop happening in the market, because all the traders holding the long positions will come for liquidation. Then again the gap time 13 to 13:30 GMT, they will try to gain, and hence I say that gap time moves are false moves. If you follow these and follow the GMT time frame, you will be able to really understand. And if you just perceive the market with your local timing, you will not be able to understand at all. It is something like you are expecting the international market to come to your home, because you have to only go to the market and understand the market rather than expecting the market to come to your home, even though you get it in your terminal. So follow that market in GMT time frame, which is understandable to everyone, because the players follow the GMT time in order to make the market swing 24 hours. So this 13 to 13:30 GMT, whatever the move they do, if they are making a downward move in the first 30 minutes, you will come across an upward move. If they make an upward move during the gap time, you will come across next 30 minutes a downward move. So you can make definitely a gap time trade understanding what sort of moves they are trying to do it. And these moves will be quick moves. That is why I always say quick moves are false moves in the market. And if you understand the quick moves, with the help of the chart you will not be able to understand. With the price action you will be able to understand. Hence I am telling you or requesting you to follow the live market code page, so that we will be able to understand the move is whether quick or not. The disadvantage in the chart is whenever the consolidation happens, automatically the chart gets expanded, and a range of 20-30 pips, it will show such a big candle formation, and you will think even 15 pips drop, 3 red candles, and immediately you think that let me sell. Then immediately you are not able to get convinced, because many times you would have been trapped. Then you go in for 30 minutes chart, 2 hours chart, 4 hours chart, and 1 day chart, and 1 week chart, and things like that, because the uncertainty is not removed. And if price action, you are able to participate in today's market, live market. Then afterwards US session 13:30 GMT they start, and 20:30 it gets over. Then afterwards you come across 4 hours of gap time, and these 4 hours of gap time they really make use of to gain the levels or lose the levels and create surprise to the traders the next day. So this is how, if you follow the timings and follow the live market code page, you will be able to really understand the sudden quick move start during these timings. Then you will be able to understand that you need enormous patience to read the players. See, all these things I gathered indirectly and directly and got it confirmed, and for the past 12 years I have been using it. And those who have been taking the professional trader training from me, know that I have not still changed the concept of reading the market. The players are doing the same. Now, in order to read the market, follow the GMT time, understand the market timings and the gap time, and also the session start time, 1 hour and 30 minutes from the start of the session, and 1 hour 30 minutes towards close of the session, then the mid session in between that. So this start time, they will be very busy handling the majors. This late session, they will be handling the majors. During mid session, they will handle the crosses. So this, if you understand, yesterday they made a very quick drop after the start. Towards the end of the early session, US session yesterday, in the case of Euro, they made the drop, but GBP, they have been holding it. And you will notice that mid-session, they have been handling the crosses, especially Euro GBP, they made a quick drop. Then late session, they handled the majors again. They gained some levels in the case of Euro, but they gained up to 1.64 in the case of GBP. Then from there, they have been simply holding it. During Japanese session, they made a one upward stop and are holding it. European session, they have been holding it. So this is how they just hold and induce the traders to come for short cover. And when the patient is tested, automatically the traders come for short covering or long liquidation. So when the market is 24 hours, you find there is a lot of patient testing times. And the mid-session, especially when they are just handling the crosses, those who are holding positions in the majors will be losing the patience. And so if you want to trade in crosses, choose the mid-sessions. Mid-Japanese session, mid-European session, mid-US session, like that. If you want to trade in majors, choose these early sessions or the late sessions. Suppose you are taking a sell position in Euro and GBP and they have dropped it, and try to close within the session. Or when they are simply holding it during the mid-session, you just close it. Again, late session, they will make one more upward move or the downward move and try to participate and close it. So this is how you can just minimize the time taken for each trade. And I have given the live market code page link in the hotcom window, and this is from that of Saxo Bank, and I found that it is more reliable, and also it is from that of the interbank treasury. And normally you come across other codes, similar moves, but the highs and the lows, sometimes when it comes from that of the broker, whatever the high they set it as a high for us. So sometimes you know that the brokers, they make the stop-ins for their own clients, because the brokers can earn only from their clients. So they just make an upward stop-in above that of the high, or downward stop-in below that of the low locally, and try to earn from that of the traders' positions. So here you find a reliable high and the low. That is why I am recommending, not with any other association or the hidden agenda. Then note down the high, low and the net changes and compare the market, and net change will indicate where the market is. When the market is consolidating like this, at the mid session, they are not going to immediately rise it. Only during late session, they may bring in some moves. In the case of Euro and GBP, you can wait for that. So we need not watch 24 hours. You can just leisurely watch the market and still leisurely trade, understand, provided you know what type of moves they are making in the market. And the moves, I explained it. I'll also use the slide and explain to you. Then identify a currency which is made more than 40 to 50 pips spread between the high and the low during the session start time, and try to take positions in that. If the range is only about 10 to 20 pips and things like that between the high and the low, you don't look into that currency. You look into the currency where the spread is more. Now you find European session, you find the spread is very wide in the case of Euro, GBP, all those things. But still, in the case of Yen, it is only 60 pips. And in the case of CHF is up around 100 pips. But in the case of Canadian dollar, it is only about 40 pips. So when the spread is less, you may not come across much of a moves immediately. When the spread becomes increased, then you try to participate in that, following the market timings. Then how to decide on the entry point of it. So always try to take a buy position when the market is near that of the low, not breach the low during the start of the session. So wait for 30 minutes from the session start. I gave you the timing. 7:30 is the start time for European session. And up to 8 o'clock, you just 8 GMT, you wait. And if the high is not been low is not been breached, if the market is near the low, you try to take a buy position. Your exit level will be near the high. If the going is good, if they breach the high and go above, then use the trailing stop and try to move 30 pips from that of the high, because they may do a stop hunt. In case if they just go above that of the initial high and stay there for more than 30 minutes, keep about 75 pips from that of the high, the limit, because they wanted to make an extended move. The first gain is 25 pips, then 3 gains of 25 pips, 75 pips above the high, they will rise. That will be the exit point. If the first gain is 50 pips, then they will gain another 50 pips and another 50 pips. So 150 pips higher than that of the high you keep. And also the net permissible level for the day is about 150 pips on a normal day. In the case of Euro, 250 pips in the case of GBP. Then try to fix the exit out of there. Don't become greedy. Euro will go to 1.55 and things like that and simply hold the positions. Understand that every day they can only make certain amount of moves. They cannot make indefinite moves. So understand that if you get rid of the greed and the panic, you will be able to make sensible trades. So that is how the exit has to be decided. You can use the chart and you can use other statistical analysis to find it, the resistance level, and try to keep below the resistance your exit. But you know the players are known to breach the support and the resistance very frequently. So in such a situation, practically understand from that of the live market quote page how much they can rise. Say for example in the case of Euro, they are raised 63 pips positive net change. They can rise another 90 pips only today. So in case if you have got a buy position, if you want to fix an exit, then try to keep only 150 pips net change level. Beyond that, they may do extra on exceptional days about 160, 170 like that. But normally, they come up to that of the 150 and then hold. Similarly, on the downside, in case you had taken a sell, in the case of Euro, so Euro 1.4277, you had taken a sell, or 60, you had taken a sell. You want to exit, then don't immediately think it can go to 1.40, then I'll exit out of that. You know that they can drop only 150 pips from that of the low. The low, 150 pips net change level. Now 62 pips net change level. They can drop up to about 60 pips to start with to come to 0. Then another 150 pips. So about 210 pips they can drop. That is a potency. It doesn't mean that they have to necessarily drop. It depends upon the volume. It depends upon their intention. How many traders are holding long and short. They have to evaluate from time to time and then accordingly make the moves. And there are 3 sessions in the market. They can drop in one session, rise in another session. If the sellers turn large number, then that of the buyers, immediately they have to reverse the market, so that they are able to earn from that of the sell side as well as the buy side. So that is how the volatility is brought about in the market. So when you are trying to book profit on your sell side, try to keep stop at entry and try to trail down as they come down. And so that will be one way of protecting your profit. So trail the stop once the position makes about 20-25 pips profit. Then keep the initial low as your exit point. 1.4125 is the exit point initially. In case if they come closer to that, then you remove it and move it around 30 pips below. And if they breach, see whether they are doing a stop hunt or they are just making a brief downward move and go above. And if they stop cutting that particular new low for more than 30 minutes, that is the exit point. And try to close the position. And in case if they breach quickly, then trail the stop and lower that limit to 150 pips on the downside and try to see whether the market hits your stop or fill your limit. That way you try to maximize the profit. So this is how you have to decide on the entry and exit point. And in case if they breached the high or the low during the start of the session, then you have to understand they are trying to make an extended move. And if they hold above that of the initial high for more than 30 minutes, so today they made an extended move quickly from 230 to 330. That is how you have to identify. Between 230 and 330, they set the initial high. So they formed the high and they breached it. And subsequently they stopped cutting the high, the new high. Then not cut the high for 2 hours and started making the drop. They have been above that of the high set around 230. That is why I always say that note the initial highs and the lows between 230 and 330 GMT. Then now we will be able to understand how they set the initial high and breach it, make an extended move on certain days. Today is an ideal day wherein I will be able to explain, because they set the high 230, then by 330 they just breached it and afterwards stopped cutting that particular high. Then extended move is only for about 2 hours. Intentional move, they take about 2 hours and the early part, 2 sessions under the early part of the third session. The extended stoppment is a type of move they gain quickly about 150 pips or drop 150 pips just in a matter of about 1 to 2 hours. So that happens only during the month end time or the month beginning time, as it during the trend reversal time. So follow whether it is a stoppment or a false move. Going up to that of the low and just reverse and hit the high and go above, then it is a false move. Then they breach that low and form a new low and within 30 minutes come above that of the initial low, then you call it as a stoppment. Extended move, for 2 hours they stay below the low or below the high. Intentional move for 2 sessions and the early part of third session they make the moves. These are all only the type of moves they do it, and they do it in sequence. They start the session with a stoppment, then gap time they do that false move, extended move during that of the European or US sessions, the intentional move the next day. Then again they make the stoppment, false move, extended move, intentional. So if you read the first move, then you are able to understand the following moves are going to happen today. Is it difficult? Okay. So the time is up. So I'm not taking any positions as such, because I thought that understanding the trading idea is more important. Probably during your session I will try to show the trades. So I'm leaving it blank, so I will not be able to read any trade. And meanwhile, I'll just try to answer to that of the questions which are asked here. I'll focus the camera over that of the live market code page. Then Robert has got a question. I would like to know live market code page. Can you show any indication whether the players predominantly wanted to rise or drop from the consolidation point circular trade, like when holding near that of the initial high and the low? That's what I explained, Robert. Now I think you would have got it. So near that high, they just make a circular trade and create the feel as if they are going to do it. After 3:30, they stopped it. Sometimes they do it during that of the mid-European session. Sometimes they do it during that of the US session. So ultimately, if they make a quick move, understand it is going to be only for 2 hours. They make a slow slide, understand it is an intentional move. Slow moves are intensive move and quick moves are false moves. So if you understand that, you will be able to do really well the counter trade. Can you chart to demo? I'm not able to follow what he is trying to ask. Then Albert, thank you for the excellent. Okay, review today and the masters. Okay, thanks for all the appreciations. And DBFX. So take opposite trade when there is a big news. See, it is not like that. Don't immediately conclude whenever there is a big news, you have to take the opposite position. It is not like that. You try to read what they are trying to do before the news release. They make a false move before the news release. In case if they rise the market very quickly before the data release, understand they are going to drop after the news, giving a different type of interpretations. So yesterday, you know that US data was weak and everybody was expecting euro to go up, whereas they just made about 5-10 pips gain and then dropped using some other attribute. So they can give any sort of interpretation for that. If they go up, if the US data is negative, they can simply say it is a US weakening move. And simply if they drop euro, they will say that risk aversion. So what you can do with that? The data has got no meaning according to your trading. Ultimately, you have to understand what they are trying to do. So that you will be able to see before the market itself, before the data release. So even it is non-farm payroll or any data, before the data they will try to make a false move. Read in the live market code page, because in the chart it will be delayed and the candle formation will take about 5 minutes. But if you see in the live market code page, you can exactly see what they are trying to do, and also you come across the signals are being formed in the market. But today I have not seen anything. Otherwise they will show a higher bid and a higher ask. Before that, just about 1 minute, 2 minutes before the data release, they will indicate it. In any one of the currencies, they will try to show a higher bid or a higher ask and things like that. That is an indication, or they are just checking whether the stops are there above the market or limits are there above the market. This is how they check and try to make the moves. Ultimately, it is nothing but the trap move. It is not the strength and weaknesses of the currency, or it is not which country is weaker, whether US is weaker or Europe is weaker or UK is weaker. It is not like that. It's not the way to evaluate it. But they simply make it, give an interpretation based on that, as if the country is going to sink or rise and things like that. And they, in fact, induce a very small trader who might be trading with $5,000 or $10,000, and they simply induce him to think about US economy, how he can think and give a probable solution to US economy to come up. So you follow the false move and then try to take the positions. In case if they breach the high, don't immediately take it. You just wait whether they are doing a stop and above that of the high and come down for 30 minutes. In case if they just stay above that of the high for more than 30 minutes, understand they are going to make an extended rise. Wait for 2 hours, afterwards take a sell position, you will be able to see profit in it. So that is how DBFX we have to identify and fill. You emphasize on the psychology in the trading between the big players and the retail traders. Do you have any recommended books? So these are all, see, psychology, the true psychology is something different. The trader psychology is something else. Because, first of all, when you become a trader, you become impulsive. And normally our decision making in our life is not that very fast. And unless and otherwise you are moving in a very fast moving vehicle, there is no need to make very quick judgments and try to navigate or negotiate. Otherwise, you take time to take your decisions, so you are not under the grip of emotions. At times you find we do take emotional decisions during such scenarios. But in market, the quick moves trigger the emotions very fast. The traders become very, very impulsive. And that the players try to trap. And that is how they try to do it. And you don't require a book to read it. You just understand how your fellow traders are doing. You yourself have been doing it. In the beginning, when you looked into the market, how you incurred so much of loss. Nobody has come to your place and say that, come on, do this and lose all your money. But we simply lose our money. Then understand who is responsible. We are only responsible. In what way we are responsible? Because our emotions have controlled our normal logical thinking. So there is no need to read any books, sir. You derive it out of your common sense from that of the other fellow traders, and also you find in the blog, forum, everywhere, people try to give so much of their calls and things like that. Later on, they say that it has gone correct, and they become very greedy and say that I just closed it in a hurry, otherwise I would have earned about 100 pips. So when they are not under the grip of fear, they will be under the grip of greed. So you have to strike a balance at it. The author. Okay. Then Scooty, what happened? Okay, what happened today in Euro CHF and USD CHF? Further drop or gain. So they are making some extreme moves in the case of USD CHF, and those who have got enough usable margin can buy. Otherwise, when they are making such extreme moves, if you think that this is the extreme bottom and try to take a buy, they will try to go down further and show you still further extreme. And unless and otherwise you have enormous equity to average it every 100 pips drop and hold it, then you will be able to see a massive profit. For that, you need to wait for a long time. So instead, as small traders, focus only on intraday trades and try to grab the money. Ultimately, don't have any sentimental attachment to any currency pairs. You just see whether Euro can give me profit or GBP can give me profit. And if the currency is not in your favor, you just ignore it. There is no need that you need to have a sentimental attachment to any currency pair, even though you might be belonging to that particular country as far as trading is concerned. Sound fluctuating. Okay. Is all or none search indicated by the higher level bid? Yes. Then Robert. After reaching a daily limitation, does the volatility become less until next day? No, it all depends upon the traders' positions, because during the week beginning, the traders' participation will be less. So the traders will be looking which way the market is going to move, and later on they will try to take the positions. So as the positions as the traders start committing positions, the volatility increases, and the peak is seen on either Thursday or Friday or the month-end time. So during that, it is not only the spot market. You have the CFD market, and you have the futures market, options market, and also the exporters and the importers going for the forward cover and things like that. There are various other markets associated with the forex. So everybody is participating in the market. So in all the places, they have to see where they can earn very good money, getting the insider information and try to earn. So they are not simply looking at small traders, making them to lose $100, $200. They wanted to earn very big money. What will be the fate of? So GBP is going to be the currency of UK, and there is no change in the fate of it. Probably it will go up and down. That's part of the game. Then Alopez, what is the Euro is repeating the same pattern that last 2 Fridays. Repeating is not breaking the hat-trick rule. No, hat-trick rule is something different, sir. 2 sessions, 2 days, and 2 weeks. 3rd week it will not repeat. Then Eric, what do you expect for the rest? Why they change it? Because they do not want the traders to understand their trick. Simple. What do you expect the rest of this session and the US session? They are expected to slide. They started making the intentional move. So this is how I read the moves and identify what they intend to do and fine tune my forecast. So slowly they will slide all through the day. Little bit of pullbacks will be there in order to induce the traders to commit positions, but you may not come across big upward moves. And then could you point a couple of examples? Probably during the US session I'll try to show in the live market code page how exactly they are making moves. Then Bazak. CHF has been in the down for 6 months. Yes. See, they make such extreme moves in selected countries, currencies. See, in 2008-2009, Euro was around 1.60, GBP was around 2.11, and you just compare the economic conditions of those countries from 2008, 9 and 11, you may not come across much of a variation if you are living in that particular country. But they make such extreme moves as if that is the safe haven in the world. So that's part of the game. They simply accumulate. Now how exactly crude they have taken it above 100 plus, and also gold around 1500 and above, and silver around 38, 39. So these are all extreme moves they do when the traders actively participate in those commodities or the currencies, they try to make such extreme moves and try to earn maximum possible. This normally people call it as a cartel. So that is why I say that in such currencies don't enter, because you may not be able to withstand the pain what they create. In Vijay. Okay. Thanks for all the appreciation. Jag, what levels you can drop during the month end? And there, see, Euro is expected to come below 4,000, 1.400. Probably by Monday, Tuesday, you will be able to come across and then say, yeah, I could have taken a sell position when Euro was around 1.42. That sort of repentment comes among the traders very, very frequently. But when the level is shown, they hesitate taking positions. So you have to get rid of the uncertainty. Not that I am trying to say that you come on vociferously do sell and buy trades and things like that. You have to judge the market and then accordingly take positions. Because ultimately what we are interested in is making profit. Then Jason, the intentional move starts for the European session. The target set for the initial low of the day, example 1.4525 in Euro, yes. They will initially target the initial low, and when the traders buy, see now they target the psychological level here. I'll just finish it. Psychological level, and in case if the traders continue to buy around the psychological level, then they go to that of the next level, the initial low. In case there again the traders buy, then go down and buy it. The traders sell after breaching the psychological level, then they reverse it. I think I have to wind up with this. There are some more questions I'm not able to answer. Yeah. So I'll come back again by 14 GMT and continue the talk. Kindly bear with me. I've taken some time. See you again by 14 GMT. I'll answer to the rest of the questions which are asked here. Thank you all and all.